So welcome everybody to another workshop in our financial sustainability project. Not all of you are in that, and that's fine. Um, but this is uh, the workshop on how to managing our expenses, and one of our big expenses is insurance. So uh, Tom and Morgan are with us, and they'll tell you a little more about themselves. But they're with Brown and Brown, and part of working with us on the New Jersey Presbyterian Insurance Partnership, and have helped us get that sort of up and running again. So it's been really great. So I'm going to turn it over to you guys, and um, let me know if you need me to do something.
Sounds good. Thanks, Gene, and thanks everybody for joining tonight and taking the time to listen to Morgan and I chat a little bit tonight. I don't know if Gene forced you all to be here or if you just came of your own free will, but either way, we appreciate it. So I'm going to try to share my screen here so I can pull up our presentation and see if that works. So bear with me 1 second and see if I can get this pulled up.
And you did it.
Okay, now next step,
Slideshow.
slideshow from beginning.
Good job, Tom.
All right, everybody seeing that okay?
Mm-hmm.
Beautiful. So Gene asked us to come on this call and talk to you about some insurance things. So I just want to introduce myself. I am Tom Bender. I am the Community Insurance Services and Religious Organizations team leader at Brown and Brown. I've been with Brown and Brown for just over 5 years now, working on the church team. Become quite an expert on the church field when it comes to handling the insurances and the needs of the churches. And Morgan, I'll go ahead and let you introduce yourself.
Sure. Hi, guys. Morgan Thomas. I specialize in religious organizations here. Like Tom, I've been with Brown and Brown for about 5 years, been in the insurance industry a shade over 10. And I'm not sure if you guys heard, but I was joking with Gene that I was a pastor's kid. So I did grow up in the parsonage of my dad's church. My parents met in Africa. So as I progressed in my insurance career, and the opportunity presented itself to work with churches and religious organizations exclusively, it was certainly great to do so. And I really do appreciate you guys taking the time this evening to listen to Tom and I talk about insurance.
All right, just a quick little agenda. I'm going to do a quick little introduction of us. We already did, and about Brown and Brown and who we are. Understanding your insurance policy. We're going to do a quick little 101 on insurance. We get a lot of questions from our churches that we deal with and outside of the Presbyterian program as well as to what's important for us to be looking at or what policies and coverages should we be looking for. Talk about some insurability strategies and what we're seeing out there in the market, how to manage some insurance costs on a high level, what each individual church can kind of do. And then we'll have a quick closing and answer any questions that there might be at the end. We'll have that open forum so you can fire away at us with whatever insurance questions you might have. So I'm trying to get my face off the screen so I can see my slide better here. Sorry. Brown and Brown, we're the fifth largest brokerage in the country. So we are a large organization. Our office is on the right-hand side of this slide, local and specialized. We work with a ton of religious organizations and nonprofits. So we really have the expertise in this field. Over $500 million dollars in premiums based on our religious organizations and nonprofits. We have about 115 people in our office, teammates in our office, and we have been the program administrator for the New Jersey Presbyterian Insurance Program for over 30 years. I believe the program initially started back in 1993, and it's been going strong for this long period here. And recently, the last 2 to 3 years, we've really been trying to work on building it back up as the insurance market has just gotten tougher and tougher with trying to help out, all the religious organizations we deal with. So with that said, I'm going to pass it off to Morgan. Morgan's going to start with going over a little insurance 101, talk some deck page information and some coverage stuff you're going to be looking at. So Morgan, go ahead and take it away.
Thank you, Tom. Yeah, so where we usually start and where most commonly people start referring to their insurance policies is the common policy declarations page. So as you can see on the screen, there are just two examples of those. Most of them are designed differently because they are carrier specific. So the one on the left, some of you may be familiar with, it's Guide 1. The one on the right is Philadelphia Insurance Companies. But some things that are important for you guys to see as you're reviewing and analyzing the insurance program are obviously the effective date, the lines of coverage, the premium breakdown, the agent's information, as well as the policy number. So this can also be very appropriate to have on hand in case of a claim, in case of a billing situation. This is just a good document to have to reference. So usually right after the common policy declarations are the schedule of forms and endorsements. And I kind of call this the table of contents of the insurance policy because it kind of gives you a roadmap and a high level overview of coverages you have. So it is important to note that endorsements can be good or bad. So it's also very important for you and or your agent to go ahead and review those. Um, and they are broken down as well by line of coverage. So you'll notice that there's a set of endorsements for general liability, for commercial property, for crime, and so on and so forth. Um, I would say that generally speaking, an endorsement schedule is usually 2 to 3 pages in length at minimum.
And one thing I always like to mention, Morgan and I run across this a lot when we're trying to quote somebody's renewal and it's a new church to us and we ask for information. Typically, we ask to see a full policy from the churches. A lot of people only want to send their deck pages to us. And the one thing that's not there on those deck pages are some of these forms that we're talking about here on the form and endorsement page. And this is where the true nuts and bolts of the coverage is on these coverage forms. And this is the information we need to see to make sure that you have the proper forms, the proper language in your policy to make sure you're covered for a lot of the risks that you could be potentially exposed to.
So just getting into some high level overview of coverages and why they're necessary. And I thought these might be good opportunity for you guys to kind of think of some questions you might have had in the past and just spark some curiosity from you. So the basic coverage, general liability, I nickname it as slip and fall coverage, frankly, because that's the most common claim that we usually see is someone is at the church, they slip and fall, they go ahead and tender you paperwork from an attorney, and you guys would forward it to us. But it covers bodily injury, property damage, as well as personal and advertising injuries suffered by a third party. So that is obviously someone who is not a member of the church necessarily. It obviously acts as a financial safeguard for churches if you guys are found liable. So if there is a circumstance where someone slips and falls, and hypothetically the sidewalk has been ridden with cracks and it's uneven, and maybe you've gotten lost control requests from the insurance company and someone trips and falls, that could be a situation where we are found negligent and liable, and we need to dip into our general liability insurance.
Yes, I know, Mary.
There is one thing also to be aware of for the general liability. It's important to make sure that all the locations that you guys might have operations at, obviously the most common would be the church as well as a manse, but some other things that should definitely be listed on there, and it's important to note if they are or not, would be like if you guys rent a food bank or a food pantry off-site. If you have some space, maybe there's some tutoring or some work that's done at a local school. If that exposure is there, it is important that we should list that on the schedule of locations per the general liability. Also thought it would just be helpful for everyone to kind of just have a high level overview of understanding of how general liability is rated when it comes to religious organizations. So obviously, the most common is just the house of worship, the church itself. That is always going to be rated on square footage. So I know in years past, Tom, myself, and the rest of our teammates were always harping on you guys about square footage of the church, square footage of the church. That's something that we want to get accurate. So we are being rated in a correct manner for the general liability. So some other common ones are daycare and preschool, and those are usually based on enrollment. Lesser's risk only space. So that would be traditionally if you rent space out of the church, let's say you have a daycare that's not church operated, but you rent that space that you rent is usually rated on square footage. Lesser's risk only dwellings, that would be like a manse, those are rated on units. And then if there is any camps, those are usually traditionally rated on enrollment. So Fred asked, how do you define a member of the church? I'll answer that real quick for you, Fred. In most religious organization policies that are geared and crafted for religious organizations, there is an endorsement on there that pretty much makes anyone who is a member or a volunteer of the church an insured. So a member of the church, I suppose, would be someone who is on your member rolls. So if they, are on your membership rolls at the church, I would consider them a member. Now, that being said, per the insurance policy, volunteers of the church are considered insureds, aka members as well. So property, obviously the property coverage, we all know that it can be elected obviously for property that you own, aka the church, and it needs to be a triggered cause of loss in order for that claim to be covered. Well, hold on. Bill said square footage of the building or property. Bill, that would be square footage of the building. So, and that is important to note, it would just be the church. It would just be the church or a recreational hall if there was one, but it does not include like storage sheds or garages. We don't include those as a house of worship for the general liability rating. So the one thing I think it's important to note is covered cause of loss. That is very important, obviously, in the policies. We want to make sure that we have robust and comprehensive covered cause of loss. And then another thing to note is business personal property. So business personal property, that would be the contents within the church. So that has many more limitations and exclusions than the actual building. So I know many of you have been with us for quite some time, and we used to have to schedule things like stained glass when we were with United Fire Group a few years back. We had to schedule stained glass and schedule organs. So as long as the organ is built in to the church, that is considered building. If the stained glass is also considered building. Where we have to make sure that we have appropriate limits is the valuations of those items, the stained glass as well as the organs. I've been surprised from a lot of Presbyterian member churches that have very expensive organs. And Tom and I and Brown & Brown, we do have some resources as far as ways to figure out rough estimates of organs. However, what we found is best is local historians and or appraisers usually give the most accurate information. And just some terms to be aware of. I mentioned one, cause of loss. Co-insurance is another one, which can be a penalty against the property policy. Agreed value is important because it does waive that co-insurance penalty. The valuation type, and then also the inflation guard. So that's a great question, Jeff. If the organ is not built into the building, then it would not be considered property. Excuse me, it would not be considered building. It would be considered business personal property. And there are some limitations on musical instruments. So the next slide, we're going to see what those are. And then Bill asked, are there sublimits? So Bill, are you asking, just to follow up, are you asking, are there sublimits in regards to certain things? Tom, hop to the next slide because that might help Bill's question. So on the point of limitations within the business personal property, aka the contents, the inland marine section is where we usually take care of those items. So the most common are fine arts, religious artifacts, musical instruments, any high level audio visual equipment that might also travel off property. And by and large, I would say the most common exposure that I see goes unnoticed, so to speak, are handbells. I know that handbells can be quite expensive and chimes, and usually those go off-site to be serviced. And anything that goes off-site from the church and is of high value, we certainly want to make sure that we have scheduled as inland marine. The example you see there on the left, that is an updated inventory list from a church that we ask for on an annual basis, at least a biannual basis, because it's amazing how much a lot of this stuff comes and goes. And it's also important to note that some of these items, like guitars and we mentioned the handbells, but maybe an electric keyboard, those things might go from the church to another church to play. And if there is a car accident or that instrument is stolen out of the vehicle for any reason, if it's not scheduled as inland marine, there we wouldn't be afforded any coverage for those items. So just again, some information about the coverages. Pastoral professional, that is essentially a claim that arises out of the guidance or advice from pastors, church leaders, and other high-ranking personnel. So one example of that may be the pastor or minister is giving some kind of marriage counseling to a couple, and that couple unfortunately gets divorced. Now, one person in that marriage says, "Hey, the pastor gave us the wrong advice. It caused me damages, both monetary and pain and suffering. So therefore, I feel that I'm going to take legal action against the church and the pastor." And then directors and officers, we get a lot of questions from churches about this coverage. Why do we need it? Who's covered? And it is one of those coverages that is very important and applicable because it covers not only the church, but it goes all the way up the ladder to the presbytery as well, or it can. And this is essentially a coverage that will provide defense and protection for allegations of bad decision making, poor judgment, and it includes a wide range of people as well. It includes all session members, all board members, and anyone that's part of a committee. So a claim example for this one might be session at one point approves, or the finance committee approves a capital project. And that capital project is funded for, there's money raised at the church. The next thing you know, the project starts. So there's a bunch of money paid out to start the project. And now the local township or municipality comes in, they shut the project down for an easement, some kind of, zoning that wasn't approved. And now the project is halted and essentially nullified. In that circumstance, if the church is out of a lot of money, the church members can actually take action against the session for the monetary loss that the church suffered. And in that circumstance, the directors and officers coverage would provide some coverage there, both defense and any judgment that would be rendered as well. And then obviously sexual misconduct, we've all heard that coverage. I know that we have harped on you guys about certain parameters that have been required to maintain limits of coverage. But as I was putting this together a few weeks back, I mean, the graphic there where it says 1 in 5 girls and 1 in 20 boys was really alarming to me. So obviously we know that social inflation and the social pressures that we're in, these have been heightened. These claims have been heightened, and the allegations have certainly been heightened. But that would provide defense, settlement expenses, and any liabilities related to misconduct, molestation, or abuse of someone at the church. So the one thing I think it is also important to point out is this coverage is designed to protect the organization. So I only say that because if someone individually and only individually is mentioned and named in a civil lawsuit, our coverage will not respond for that individual. Now, if it's for an individual and the church is accused of being negligent as far as hiring, supervision, that type of situation, this coverage would respond and provide that defense in any settlement that might be rendered against the church. Employment practices liability is essentially discrimination, harassment, breach of contract, and there's a litany of other things that provides coverage on that. But some claims that we have seen have been some things as far as like intimidation in the workplace. So I know I've been through a couple claims in the past where it's been a situation where the pastor is kind of intimidating a church administrator, and now that church administrator feels that they're threatened. Eventually, it leads to their termination. And now we see a wrongful termination / intimidation type of lawsuit rendered against the church for this type of situation. And then business auto coverages. So obviously the physical damage is if you own a vehicle. So if you own a church van and you have it scheduled on your policy, you're purchasing both auto liability, which is auto liability if you cause damage to a third party, both property damage or bodily injury. And then the physical damage component is what we call comprehensive and collision coverage. So if you actually get in an accident and then the vehicle needs to be repaired. The most common one that we see questions on is the hired and non-owned auto coverages. So this coverage is it's still very inexpensive, even though the premiums seem to go up every year. But the reason for that is because there are claims in this coverage. For some reason, and I always joke about it, but it's not a joke, attorneys think that churches have really deep pockets. I've never understood it. For some reason, attorneys think that churches are cash rich. So, Bill, I'll answer that one in 1 second, okay? So attorneys think that we are cash rich. And if there's a situation where the church secretary, a volunteer at the church, somebody is using their own vehicle and they are driving to the post office, they are driving to the bank, they are going to pick up something from the hardware store, and we are in an accident, and in the police report it says, oh, I was driving on behalf of First Presbyterian ... to the hardware store. For some reason, attorneys will jump on that and they will try to bring us into a lawsuit. And if they're successful, we need hired and non-owned auto coverage in order for that to respond. Bill asked a question as far as, are there exclusions in the child sexual abuse and or employment practices coverages? So Bill, that is, I don't want to say a loaded question, but there are a litany of exclusions. So some of the exclusions that I guess there are exclusions to answer your question. I can't name them all because there's quite a bit. The employment practices coverages exclusions, I would say, are more favorable than the child sexual abuse exclusions. And quite frankly, a lot of the exclusions on both of those forms are because other coverages will respond. So for example, in the sexual abuse form, it talks about how they're not going to cover anything from a general liability perspective. It's siloed for sexual abuse. But Bill, I'd be happy, or Tom and I would be happy to expand on that for you a little bit.
Yeah, and one of the big things when it comes to those two types of coverages is not so much the exclusions, but more what could cause coverage not to enact. And that would be some things like if we've filled out applications that are basically become part of the policy when you fill them out, and we attest that you have certain policies and procedures in place, and those policies and procedures are not being followed, that can lead to a potential claim not being covered. So that's why there is such a push on getting the abuse and molestation and employment practices liability applications filled out and filled out correctly, and making sure proper policies or procedures are in place, because that can lead to issues come claim time if those procedures are not being followed.
And to piggyback off of Tom's comments on that piece, really what we see is, to your point, Tom, opposed to exclusions, we see carrier action more so as far as limiting coverage. So right now, our program, the New Jersey Insurance Program, has 1 million, 3 million limits, so $1 million per occurrence. And what we see is carriers, if they don't like the policies and procedures, they'll limit those to like 250,000 per occurrence or $50,000 per occurrence, whatever they feel is best for them to safeguard themselves until they are able to have policies and procedures and certain things that they're comfortable with providing that coverage.
If I may have a follow-up, can higher limits be purchased in certain areas?
Higher limits?
Correct.
Yes, they can be. So in our program, we do have $2 million of coverage on top of the $1 million occurrence through our umbrella. Now, that's
Okay.
not necessarily the normal in the marketplace. Most carriers, when you're purchasing it from, I would say, a standard carrier like Guide One, Philadelphia, um, some of those others, the most they'll give is $1 million traditionally. Now, that being said, there are some case by case scenarios where I have seen higher limits offered and purchased. If we want higher limits, then we'll say $3 million. We have gone to what's called the specialty market or the excess and surplus market. And what we've really seen is when you want to purchase even an extra $1 million of abuse coverage, it's like 10,000 bucks. So it gets pretty expensive once you have to enter that specialty market. And then the other thing, just a note on that, is that specialty carrier will only kick in once you exceed, in that case, $3 million of coverage. So it is possible, though. It is certainly possible.
Thank you.
Hold on, Walt asked a question.
Nope.
Oh, no, Walt did not. So Steven Cyphers asked a question and said, doesn't that raise some kind of red flag? Are you talking, Steven, as
Why
far
you
as
want
like,
additional limits?
well, that's funny. There's a couple philosophies on that. And in the nonprofit world, we have a couple gentlemen in our office, and their philosophy is the lower limits you have, the less attorneys are going to attack. Now, that being said, there are certain limits that we need to maintain in order to um, keep ourselves in line with what the presbytery has warranted, has needed. And those limits are pretty standard as far as across the board. Like the what we're asking for as far as compliance is not higher than traditional, I would say.
Yeah, the only added benefit I shouldn't say the only added benefit, but the added benefit of being on the Presbyterian insurance program that we have is that $2 million layer that we're able to put into the umbrella. That's not standard out there in the market. And typically operations and churches aren't asking for above and beyond that $1 million limit. So sometimes it could be a little bit of a red flag if you are asking for more outside of that, but we don't see that very often. So it's not something that we come across a whole lot.
And then, as Tom mentioned on the umbrella, a couple things that are very important for the umbrella is underlying insurances need to be scheduled on there. So you should see general liability listed, directors and officers, employee benefits, sexual misconduct, and we have commercial automobile on here. A couple weeks ago when I was putting this together, I actually caught that I did not have employer's liability on here, which is workers' compensation. So I requested to essentially add that to this specific umbrella. But another note, an important note, is the umbrella policy will never be broader than any underlying policy. So that essentially means that, let's say that for some reason on an umbrella policy, you have sexual abuse and molestation, but on the underlying policy, a number of years ago, you've just declined it, and now you don't have that anymore on your underlying policy. The umbrella will not respond to that coverage. So it will never be broader than anything underneath it. And this is true catastrophic coverage. So this is if we exceed our entire $1 million limit, and then we go through and we need those extra layers above $1 million. This is for when it's really a tough situation. And that also and it's when we're found negligent, and that includes any settlement as well as other expenses associated with the claim. So when I say other expenses, it's important to note for this one, for this our umbrella, that it is not defense costs. that it is like it's not essentially legal fees. It is more so if we need to hire expert attorneys, do a forensic analysis, things like that. So,
Want to get the next slide? Here we go. All right, now Morgan gets to take a break, and I'm going to step back in here and go over
thanks, Tom.
You got it, Morgan. Thanks. Insurability and managing costs for your insurance costs. So I just want to start by talking about the current market for religious organizations. So right now we're still in what we call a hard market. So the market is not great in terms of the rates. We're still seeing a lot of increases. A lot of that is because of increased weather volatility and unpredictability. But also a big thing for all of our religious organizations is the care and condition of the facilities. We know that a lot of the church building, the churches themselves are older buildings. We know that sometimes they might not be in the greatest of shape because they are such old buildings. If there's deferred maintenance, a lot of that causes issues for the insurance market. Some of the corrective actions that we're seeing currently in the market, we're seeing significant rate increases. So on our renewals that we're kind of going through outside of our insurance program, when we just have single standalone churches, we're seeing increases still in the 10%, 15, even up to 20% increase on premiums at renewal time. We're also seeing coverage restrictions. So a lot of carriers are limiting their liability limits for the churches. We're seeing decreases in abuse limits. We're seeing decreases on your EPLI limits. Even on umbrellas, some carriers are not willing to offer the limits that some churches would like to see. And again, that's part of the hard market that we're seeing. And another item that we see is a lot of non-renewals going out. So anytime we're seeing churches that are having claims issues, they're a lot quicker to pull the trigger and non-renew those churches. So those are some of the things that are kind of affecting the market right now. So insurability strategies and what some of the carriers, some things that will help you and make you look better to the carrier. So property maintenance is one of the biggest things that we talk about. Again, property values are what attribute the majority of the insurance costs when it comes to a religious organization's insurance policy. So the carrier inspections are really becoming a hot item. We weren't inspecting as many churches in the past as they are now. Typically, they want to do an inspection after they bind coverage. They're doing on-site inspections. They'll do drone inspections. And a lot of them now are starting to use the satellite imagery, especially when we're talking about looking at roof conditions, which is a major issue for a lot of our churches, is this satellite imagery that you're using for the roofs. We have been able to combat some of that and go back to some of these carriers and fight them on some of the times when they're trying to limit coverage on the roofs because they are using the satellite imagery that might not be the most up to date. So if we're able to go back to the carriers with updated information that the roof has been fixed or the roof was looked at by a contractor or there had been certain repairs done, we can take that information to go back and fight on behalf of the church. One thing that is huge and the carriers love to see is a multi-year plan and schedule for maintenance, upgrades, or replacements. So we know taking care of the church properties can be costly. There's a lot that goes into it, and doing a lot of the things that we would like to do to the church properties, it requires a plan. It doesn't happen overnight. You don't have that amount of money sitting around to take care of some of these things. So sometimes even just being able to sit down and document what the plans for the church are in the future, maybe 1, 3, 5 years down the line for what could potentially be a roof replacement or roof repairs, a plumbing update, an electrical inspection to have a contractor come in and look at things, heating and cooling systems, making sure we have stuff scheduled on a regular maintenance program to have somebody come in and look at things. When we have this kind of information and we can share that with the carriers, it just is a good point for us to make because it just shows that you are doing the things necessary to try to limit potential claims at the property. So staying proactive. This is another big thing that we've been harping on. And Morgan and I were able to give a presentation to another Presbytery group. Who was that for, Morgan? Was that the Southern Presbytery?
Oh, Southern. Yeah, that was a
Southern Presbytery. And we talked about having proper plans and protocols and procedures in place. And in the past, this wasn't as big of a deal as it is now. In the past, we could get away with not having certain applications filled out and understanding what policies and procedures were in place at the individual churches. Now it's becoming a mandated thing that we can't even get quotes sometimes if we don't have these applications filled out and we cannot show proof that there are employee handbooks or misconduct prevention plans in place, even things like financial controls when we're talking about trying to put a directors and officers policy in place, things for incident reporting and crisis management plans, facility and ground safety, security, and safety plans in general. So all of these things will cause problems when we're trying to get quotes for churches if we can't have a good understanding of what policies and procedures in place. Not only will they potentially limit how much coverage you can get, it could potentially lead to you to not having coverage at all for certain things like sexual abuse and molestation, employment practices, and even the directors and officers policies. Being proactive and taking advantage of the resources available to you, whether it's through Brown and Brown and the resources we provide from our risk management and loss control team, whatever your current agent does for you, but also your Presbytery leaders and the Presbytery insurance committee that is in place. You all have access to the Presbytery policies and procedures, and they were all approved by Guide One, our insurance program, and every church is supposed to have that information on file at hand to be used at any time. So making sure we have access to that stuff is really important when we're talking about insurance costs and insurance premiums. So this is the big one, self-insuring small claims. So I know Morgan was talking about how some lawyers think that churches have deep pockets. We know that is not the case in most instances, but figuring out what amount a church can handle when it comes to small claims is really important. So one of the big cost drivers for the property policy is your property deductible. Some carriers have really been raising the property deductibles at renewal time for churches, whether they've had claims or not, because they are looking for churches to kind of self-insure some of those smaller claims. And it makes sense to do that in a lot of instances, because if we are reporting a lot of smaller size claims to the carriers, they see that as a deferred maintenance problem on your properties. The property's not being taken care of. You have these small water claims. These are all red flags to the carrier. And the way to cut a lot of that off is to self-insure some of these smaller claims. In the past, we used to have common deductibles were $1,000, maybe $2,500 on the high level. Now we're seeing more and more churches take on higher deductibles, up $5,000, $10,000, even $25,000, because submitting too many of those small claims is really going to shoot your insurance premiums through the roof if it continues to happen. So thinking about what the church can handle from a small claim perspective is very important.
Just want to note there, Tom, and what we're referencing are property claims. Anytime there is any sort of liability claim, you should always report that to your carrier.
Correct. Thanks, Morgan.
Of course.
So here's another thing Morgan had just mentioned about recommendations that insurance carriers make possibly after inspection. So they'll perform an inspection at the inception of the policy. They typically provide you with a list of things that they want to see done to try to maintain the building or to try to prevent liability claims from occurring. Some of the bigger things that we see, or some of the things that we most often see, are water damage. So if they're touring the facility and they see potential water staining on a roof, or not a roof, on the ceiling, that's typically a recommendation to check, to have somebody inspect that. Another big thing Morgan had mentioned before was sidewalks. We see a lot cracked, or sidewalks that have higher lips where they shouldn't have such high lips. That's potential for large liability claims, and that's a lot of the claims that we see with our churches. So when the carriers are making those recommendations, it's important that we put a plan in place. One thing that we have seen recently, based on the relationship that we have with our carriers, is as long as we put a plan in place to handle the recommendations, they are happy with that. Now, they don't want it to be 2-3 years down the line. Typically, they want to see a response within 60 days, but that response can simply be putting a plan in place to say, 3 months from now, we're going to have a contractor come out and look at these sidewalks. 3 months after that, we're going to have a fundraiser to try to raise some funds to take care of this work. And then within 6 months after that, we're going to have the repairs done. What we need to do is have a plan in place to fix those recommendations. And if we don't respond to those recommendations, if it's close to renewal time, you are not going to have a favorable renewal, and they can just cancel the policy altogether if it takes too long to at least respond and plan in place to those recommendations.
Guys, this is a true story real quick, Tom. Don't mean to interject, but we were meeting with a carrier partner and our underwriter, and they were asking about a renewal. And I would mention to the underwriter and the gentleman, I said, hey, it's a larger account. Can we have some premium relief? How are we looking on it? And it renews June 25th. And the first thing out of the underwriter and the gentleman's mouth was, well, they have some open loss recs, don't they? And they mean loss control recommendations. Now, this particular one was for fire extinguishers and an inspection in the kitchen for the Ansel system. So it was already taken care of. But that gentleman remembered immediately for the account that they had open loss recommendations at one point. So the only reason I say that is because, like Tom mentioned, when we want to get favorable terms for renewals, if we don't respond, because this just is really a response to the recommendations, we're not going to be able to really have a leg to stand on when we are asking for relief and premium.
Thanks, Morgan. So this is a big one we like to bring up, is utilizing a special agent. So we all know there's 5,000 different agents and agencies that you can work with out there. And I'm not just utilizing this as a slide to tout Brown & Brown, although we do specialize in writing religious organizations and churches. We have worked with the Presbyterian Insurance Program for over 30 years, so we understand what we're doing. But outside of that, there are other churches and other members here on this call right now that may work with other agents. There are a lot of good agents out there who specialize in writing churches, religious organizations, and there are a lot of agents who do not. And we see this a lot, and it becomes a problem because certain agents who don't understand the needs of a religious organization will place your policy with a carrier who may give you property coverage and may give you liability coverage, but they don't have some of those important coverages in there, like the employment practices liability, the directors and officers. Some of these carriers don't provide enough limits when it comes to sexual abuse and molestation. So you really want to make sure when you're dealing with your insurance needs that you do a little bit of research and find an agency that specializes in writing religious organizations, because it can make a big difference for you, not only from a coverage standpoint, but from a premium standpoint as well. Again, you need to be able to comprehend and prioritize the coverages, the church's understanding, continuity of certain things. I know Morgan mentioned some terms from the property policy side, but when we're talking about liability things and abuse and molestation coverage, directors and officers, employment practices, you need to worry about things like retro dates, which if you move your coverage to a new carrier or a new agent and they don't continue those retroactive dates for you, you could potentially lose coverage that you have paid for over the years if a potential claim comes down the road that we were not aware of at the time that you moved that coverage. There's a lot of things that go into factoring with dealing with a certain agent. So while we would always, of course, want you to come to Brown & Brown and talk to Morgan, myself, and our team, there's a lot of other agents out there who also specialize in writing religious organizations and churches. And so it's always best to look for somebody who has that expertise. The last thing on the slide there I did want to bring up, has resources to help during adverse circumstances. That's the biggest point. So when claims come up, when non-renewals of policies come up, it can be very, very difficult for the church to find coverage, especially in the hard market right now. Morgan and I and the people on the churches on our Presbytery program have dealt with this over the last few years, where we've had some adverse situations where we had a carrier who backed out of writing the program altogether because they were just removing themselves from writing religious organizations across the board. So we had 160 some odd churches who were all of a sudden without coverage. Luckily, we deal and specialize with writing religious organizations. So we had another carrier jump on board in Philadelphia Insurance, and we're able to get all of those churches back on the program and get the coverage that they had and continue that program moving forward. Fast forward another couple of years, and we had an adverse claim situation that caused Philadelphia to back out of the program and non-renew the program. We had, again, because of our expertise, we had another carrier lined up before the renewal came around in Guide 1, who stepped up again to keep the program going and not only maintain the program, but maintain the coverage limits that were necessary and also keep costs in line with what the current market was looking like. Because typically in situations like that, if you're dealing with a broker who's not specialized in this market, it will be very difficult to get you coverage with another standard carrier and have to go to the excess and surplus market and end up losing coverage and paying more premiums on top of it. All right, managing costs. So obviously in this hard market, it's becoming more and more difficult to manage the insurance costs with the inflation that we're seeing, with the costs of goods increasing, with the cost of labor increasing when it comes to dealing with the property market. A lot of this stuff has just made insurance premiums shoot through the roof. On top of that, with liability claims and the lawyers finding bigger and bigger settlements for certain things, again, just leads to higher and higher insurance premiums for all of our churches. So what are some strategies that we can implement to help manage costs? One we already kind of talked about was increasing deductibles, looking at higher deductibles on the property side and having a good understanding of what your church's finances are to see how much you can stomach in case of a small property loss will help save on your premiums. Insurance values. So again, the biggest cost driver when it comes to the church's insurance premiums is the building value for the church. We want to make sure you have a proper valuation on your church. We have tools and resources to help give estimates on that kind of stuff, but a lot of times it's important to get an outside third party to come in and do an actual valuation of your church property to make sure you are valued properly. You don't want to be underinsured by any means because at claim time, you don't want to have a claim come in and not have the proper values for your property, but at the same time, you don't want to be overinsured and be paying premiums for value that is just not there. So it's really important to kind of look at those values as a whole. Same goes for your business personal property that you have inside your building. Trying to take an inventory and figure out how much value you actually have inside your building and not be overinsured for stuff that you don't even have. Always asking your agent and your carrier about potential credits. So that's one thing that Morgan and I stress when we're talking to churches who aren't currently insured with us at Brown & Brown when we're trying to help them, whether we can find them a great policy on our own or just trying to guide them in the right direction. Always be talking to your agent and find out what potential credits might be available from a risk management standpoint. And some of that comes from simply just having the conversations about whether you might have your churches sprinklered or you have a certain building, a school that's sprinklered, you have good fire alarms, you have central station monitoring for things. A lot of that kind of stuff sometimes isn't discussed, but it can lead to discounts on your policies. So if you're not having those conversations, you could be left out with not getting some of the benefit that you can from having certain policies, procedures, or protocols in place. And then reviewing current exposures for accuracy. Morgan mentioned this a few slides back when we're talking about even the square footage of the church. We've come across this many times where we have it on both sides, where the information we're getting is that this church is 2,500 square feet, but it's actually 5,000. So that can be a problem as well to make sure you're insuring yourself properly. But if you're over-insuring and you're telling us that you have 10,000 square foot church and it's really only 7,500 square feet, or you're adding extra space onto that square footage number and we're inflating that number, you're just inflating your premiums. So it's really important to have accurate information when we're talking about exposures, whether it be your square footage, whether it be your enrollment in a school or a daycare, the number of events you're having, all of that kind of stuff can factor into your insurance premiums. So those are some of the big things that we try to factor in and look at when we're getting close to renewal time and talking to the church, making sure we have proper information in place. Just in summary, everything Morgan and I talked about tonight, understanding your coverage, the best way to help your own church out, your own organization, is to have a better understanding of what you're covered for, what your coverages look like, what your limits are, and also what the presbytery expects of you from a limit level, and how they can take a look and how that affects your premiums. Strategies to be more insurable, having proper protocols, procedures, policies in place, finding that right agent partner is critical. Having somebody who's an expert in dealing with religious organizations, not just a local agent who can write your personal home and auto, and can on the side just throw you a property policy. You're not going to get the right coverage that you need. You want to make sure you're dealing with an expert. And then ways to help managing those costs. So thinking about your deductibles, thinking about your exposures, all of this stuff is important in trying to manage the overall cost, and having conversations with your agent, asking questions, getting together with your session and talking through these situations, and your insurance. It needs to be a topic of conversation. So that's kind of all I had to bring up here. Morgan, did you want to finish with anything else?
No, I do not, Tom. We can roll right into the Q&A, and I got a good one from Walt right off the bat.
All right, what's Walt got for us?
So Walt asked essentially he is struggling on what to decide he should list as valuable items. So silver, Tiffany windows, Tiffany cross, pay for appraisals, and additional premium on our policy. Any guidelines? So Walt, I will say that there are usually some endorsements within religious organization policies that do have some, I'll call them built-in coverages. So for example, they may have expanded limits for fine arts. We see that often. In the standard ISO policy, insurance services policy, there's only $2,500. We commonly see that fine arts coverage bumped up to 25,000 or 50,000. That being said, things as far as Tiffany windows, and especially the Tiffany cross, I would highly advise that there is coverage for. The Tiffany cross, certainly, because if there were a circumstance where it was a total loss, we would want to make sure that, because I'm assuming it would be considered a precious metal or a fine art, that there are no limitations. And the Tiffany windows as well. Part of the reason that we do sometimes suggest scheduling windows, especially a Tiffany window, is because that is a piece of art. And when you schedule anything as true inland marine, what it really does is afford you coverage for pretty much anything. And I say that because in the property policy, when I was discussing that, I mentioned a covered cause of loss, and that has to be triggered. In an inland marine policy, everything is a covered cause of loss. Flood is covered, earthquake is covered. Some things that are excluded on a traditional property policy are always picked up on an inland marine policy. So I hope that helps, Walt. And if you need any help kind of reviewing your schedule or your items, I'd certainly be happy to do that. Stephen asked about workman's comp coverage. So workers' compensation, like you mentioned, Stephen, that is a coverage that is offered. We have a lot of that obviously through our member churches. It depends on certain circumstances. We have some people that are with Hartford. We have some people that are with Zenith Carrier, and then some people that are with AmTrust Carrier. That is a statutory mandated coverage, and anyone that is paid at the church on payroll should be covered under your workers' compensation, which brings a point up to if you 1099 anybody like lawn care people, painters, any of those subcontractors, so to speak, you should always make sure you get a certificate of insurance that shows that they have workers' compensation coverage. Because the last thing that we want is at audit time to have to pay for a bunch of people that we didn't expect we had to pay for.
And one thing I just want to bring up about workers' compensation coverage is a lot of people don't understand that there is room to get better premiums on your workers' compensation policy as well. So New Jersey is a set rate state when it comes to workers' compensation. So the state does set the rate for each carrier. But there are credits that the carriers are allowed to provide on a workers' comp policy. So you need to make sure that your agent is asking for those credits for you to get you some premium relief. And there's also certain carriers out there who provide dividend plans on your workers' compensation policies, where if you are claims free or you have a certain loss ratio on your workers' compensation policy, you can earn premium back. As sort of like a dividend back for your workers' compensation policy. So it's definitely a coverage that needs to be more attention paid to. I know it's not the largest cost for a lot of the churches. It's typically one of the least expensive coverages because there's just not a lot of payroll tied to it. But some of the churches who have the larger daycares or schools attached to them, the workers' compensation policy can get much more expensive. So it's important to understand what options are out there for you.
So Stephen, just to follow up on your question about how contractors, how can they avoid workers' comp coverage? Legally, they're not supposed to. So legally, they're not supposed to operate, obviously, without workers' compensation if they have employees. But unfortunately, sometimes they do. So sometimes they just pay their people via 1099 and they actually don't carry workers' compensation themselves. So it's technically legal, but it does happen. It does happen.
And if a
So Don,
contractor is just a one-man operation, they don't need to have workers' compensation coverage for themselves if they choose not to. But if they do have employees, they do need to provide that coverage if they have them on payroll.
exactly. So Donna asked a question about they're replacing the manse roof. You should advise your agent or your carrier, probably your agent. They do not necessarily need to inspect it, Donna, but it is good just to note because, like Tom mentioned previously, that just shows that we are being thorough with our maintenance of the church. It really shows good faith to the carrier that we are maintaining our big items as far as the roof is concerned. So it does give us a little bit more chance of premium relief come the renewal time.
And Donna,
Uh,
since I am your agent, I will go ahead and make note of that, and I will alert Guide One that you will be replacing the manse roof. Just let us know when that's being completed, and we can make sure that's put on file. Thanks, Donna.
So Bill asked if the individual church policies are part of a blanket limit program.
Ooh, I like
So,
that question.
so Bill, our churches all have their own blanket limits. They are not part of a general blanket aggregate limit. They were at one point in time, probably like 20 years ago, but no longer. So the way that the program works through Brown and Brown and Guide One is each individual church has their own policy. They have their own limits. They have their own essentially bucket of limits. And the reason that we find that that is very valuable is because if one church has a loss, they can be siloed and they can be kind of picked on for their individual loss. So, especially with Guide One, what we've seen is that the people that kind of warrant the increases are getting the increases, and the others who are doing well are kind of stabilized. So another thing just to note is all of our liabilities are our own liabilities. Each individual member has their own bucket of liability. It is not a shared type of liability program.
Yeah, the great thing is that it gives us the buying power of a huge group where we have, let's say, close to $3 million in premium, but each church is rated and looked at as an individual, but still giving us that group buying power. So it provides a lot of flexibility where we know we have a lot of large steeple churches who may have some more money and there's a lot more premiums attached to it. And then we have the smaller churches who may not have the luxury of as much money in their coffers. So, what that does is it just provides flexibility for each individual church then to select things like their property deductibles, where we don't have a one size fits all plan that you have to be stuck with a $25,000 deductible. You can have the option of looking at different limits that fit your church, but you're still getting the overall buying power of being in a huge group.
Carol asked, how do we view cemeteries as trip and fall risks, and what can we suggest to mitigate that risk? So it is a slip and fall risk. There's no doubt. We don't see a ton of claims coming in where it's like kids are messing around, they fall or they break a headstone and now they're injured. But that obviously could happen. Some things that I have seen in ways that we can suggest kind of to mitigate that risk. simple signs that say, private property, no trespassing, please do not disturb. Those type of things definitely work. And if there is a situation where a claim might occur, we can always point to those deterrents and say, hey, we notified you, this was private property. So those things do work. I know a number of churches that I have had some kind of issues with that as far as their alley being used as like a throughway, or maybe the cemetery being used as a throughway through town. And we have done stuff as far as like putting up just a small chain with a sign that says, please do not enter. Those small little deterrents we can always use again at time of claim to show that we did make an effort to deter people from entering our property and getting injured.
Yeah, we've had situations like that where we've had somebody who didn't belong on the cemetery property, wasn't there to, for any legitimate reasons. They were simply just walking through the cemetery. And because we had proper postings on there, when the lawsuit was tendered, there was not going to be any negligence there because of the protocols that were in place. So it's some of that stuff that Morgan mentioned is very valid.
And then Bill asked a question as far as recommendations on contract language to make sure the risk is appropriate. It's an appropriate transfer of risk. Bill, I love that question. That is amazing. So frankly and honestly, what we utilize at Brown and Brown is we provide all of our insureds a document that kind of just spells out some certain language and common language that we want when anybody is using our space, if there's a contractor coming onto the facility, but more appropriately for this question, the transfer of risk, if people are using our space, we usually always suggest that we are listed as a church as additional insured on their policy. We always usually ask for primary non-contributory language, which essentially means that the people that are renting the church, it's their insurance is going to be primary, ours is going to be non-contributory. And then we also usually ask for a hold harmless agreement, which is exactly like it sounds. We're going to be held harmless. And then finally, we can ask for what's called a waiver of subrogation. And that is essentially those people are waiving their right to subrogate against us as a church. So if it is, we'll say, a theater group and someone trips and falls on a wire on the stage, we want to make sure that they're not going to try to sue us because of that trip and fall. And that is the waiver essentially of subrogation. So making sure that it goes through their insurance and not ours.
Do you, follow up to that, do you also suggest making sure you have a copy of an endorsement from that contractor's policy that you've been named as an additional insured?
Yeah, so
We
we typically want to
Yeah, go
see
ahead,
a
Tom.
certificate of insurance from the contractor's agent that shows that it's listing the church as an additional insured on there. And then not only that, we typically want to see the limits of the policies that they have as well, because we'll see a lot of carriers and a lot of agents out there who will provide low limits to some of these organizations or contractors. And basically what we typically say is we don't want to see a certificate of insurance that has less than $1 million liability on there. $1 million is typically the lowest limit we would want to see.
So is a certificate of insurance uh, enough, or do you also want to see the actual endorsement on their policy?
Sure. So to your point, when we issue certificates, we usually include the endorsements with the certificates that we issue. So if we have a contractor client and someone's asking for that certificate, we will send a certificate of insurance, we'll send the endorsement form numbers, and then we will also send the additional insured endorsement language, the primary non-contributory language, the waiver of subrogation language that are within the endorsements. So that traditionally we do like to see that. Now, depending on the scope of work, if it is someone who is just entering and doing a small minimal amount of painting, so to speak, and it's going to be only a couple hours on site,
Right.
maybe we don't have to go ahead and get all those endorsements on their behalf. I mean, we still should, we definitely still could. But if we are looking at a multi-week serious capital project, then we certainly want to make sure that we have all our I's dotted and our T's crossed. And we would want to get the copies of those endorsement forms to make sure that they are exactly what we need.
Thank you, because many small brokers are not equipped to provide all those documents.
Exactly. Yeah. Sometimes they honestly, Bill, sometimes they don't even know what those documents mean.
Correct.
You know, like there's
Thank
been a
you.
number of times where we've had contractors come on to church properties, and our church members did a great job of asking for certificate of insurance and asking for those items. And the contractor, I'll be on the email chain, and the contractor will be like, I don't know what primary, or the agent, excuse me, will be like, I don't know what the primary non-contributory is. I have no idea what you guys need. And then for me as an insurance agent, like that's when my alarm bells go off a little bit. And I'm like, holy cow, if this contractor and this agent does not know what primary non-contributory is, we probably don't have contractor error and omissions on that policy. So we might want to consider a different contractor.
Good point. Thank you.
Sure.
See, Jeff asked for a copy of the slides there. We'll make sure we get the this presentation out to Gene, and Gene can probably forward it along to everybody.
Yeah, definitely.
Any other questions? Well, it looks like we've gone quiet, so I just want to thank everybody again for taking the time with us tonight
Oh,
to
hold on. There's a question about withholding payment. It was Steven's
uh-oh.
question about withholding payment.
Sorry,
We missed
Stephen.
you, Steve. Sorry. Let me find it again.
Yeah, can we withhold a portion of the payment we pay to the contractor because they don't have workman's comp? We have a contractor who has Brown and Brown as their agent, and they don't have workman's comp.
Well, we would like to know the name of the contractor,
Yes,
number one.
please.
And
Okay.
number two, I have seen not so much in our religious organization world, but in the contracting world and contractor world, that is very common to withhold payment before providing what was entered into in the agreement. So before I really focused on religious organizations, I did work with contractors, and I had a flooring contractor who always needed a copy of a certificate because the one guy he worked for never paid him until he gave him exactly that certificate that was entered into with the contract and the parameters of the contract that he entered into.
Yeah, because at audit time on that workers' compensation policy, if you had a contractor in there doing work and you can't provide a certificate of insurance showing that they had that workers' compensation coverage, that's going to be hitting your policy premiums at audit time.
Yes,
And
I know, because I'm going
what
through the
else?
audit right now, and I'm not real
Well,
happy with Hartford.
yeah, well, I feel the same way, Stephen, to be honest, about Hartford. Um,
Okay.
their audits have been recently too, because it wasn't always like this with Hartford, but recently their audits have been an absolute disaster, and I don't know the answer for that. We have made that known just to put a little bit of your mind at ease a little bit. Um, but I would also, if you can't get away from withholding payment for some reason, what also might be a solution was charging or withholding at least the amount that you will be charged in the workers' compensation from the contractor. So
Yeah,
if
that
that
was my
makes sense.
thoughts.
So if you just withhold like, hey, you cost me an extra $800 on my workers' compensation, so I'm going to pay you what we agreed upon minus the $800 that you cost me.
Yep. Okay. I'm glad to see that we're not the only ones who are
No.
not being treated the best from Hartford. Our
Well,
agreement, our problem right now is our salary that I submitted the audit, and they've got our labor cost as double, and what you would think would be a 5-minute conversation to get rid of it has turned into a big paper exchange. And I'll get off
yeah.
my box. Thanks.
Well, a
No,
lot of
no,
times
but
we're seeing issues with third party audits
that's
sometimes
it.
that get involved as well, and that makes things even worse. So get your and Stephen, I'm not sure which church you're a part of, if we insure you or if it's another agency. Make sure your agent is involved with the audit process, because they should be working on your behalf to try to help you with those situations along with the carrier. So if you are with us, please let us know so we can step in and help you out.
Yeah, we are with you.
Okay.
We're with the Easton branch.
Okay. Yep. That's us. We're in Bethlehem, but same difference.
Which church are you part of, Stephen?
Pilgrim Presbyterian in Phillipsburg.
Pilgrim Pres. Okay, I'm gonna look into this tomorrow when we get into the office, and I'll talk to the team there and see what we have in our files. And then maybe we can reach out to you and see what we can do to try to help out, okay?
Oh,
And
much
Stephen,
appreciated. Thank you.
yes, so don't feel picked on, because honestly, COVID really put a huge strain on audits. I mean, I know it seems like it was so long ago, but that's when it just became so normal to do everything via phone and everything via email exchange and no more in-person interaction. And that's where I saw a real disconnect start on the workers' compensation audit front. And it has just continued.
Okay. Thanks again.
Yep,
We got it.
no problem.
Well, thank you, Tom and Morgan, for joining us tonight and providing a very informative and helpful presentation. And thank you all for coming out tonight. This video is being recorded and will be posted on the Presbytery webpage, along with any other information that, Tom or Morgan sends along to me. So thank you, everybody, for coming tonight. And thank you again, Tom and Morgan.
No
Thanks so
problem.
much,
Have a
guys.
great night, everybody.
Thank you.
Thank